tips for you to trade better in a volatile market, coming up next. When things start to get a little wacky, you need to try to focus, and here are 5 tips to help you focus better in a volatile market. Tip number 1, get smaller to feel secure. Whatever positions you have on or trades you have on, get a little smaller. Now, whether this be to just take off a little bit of one trade or to not trade as big as you would have in other circumstances. For example, if you usually trade 200 shares, go down to 100 shares. If you have 100 spreads on, take off like 20 of them. This way, you will feel more secure and confident, and that will help you focus a lot better. 2, don't feel obligated to trade. Cash is a position too. We always say that doing nothing can be one of the most meaningful trades. Well, in this case, having your cash safe on the sidelines can feel great in a volatile market. If you're not sure what's going on, protect that cash. People say many times to me that money is easy to make, but it's hard to hold on to after. So this tip falls in line specifically with that. So cash is a position. Consider keeping your money in cash while the market is volatile. 3, isolate yourself so you can focus. Now, it's fun to go on to StockTwits or somewhere else on the internet and interact with other people. Some like to trash talk or troll other people, or when they get frustrated in a volatile market, they will go on and get in a altercation with somebody else about like a philosophical issue concerning a stock, or they'll try to win a war of words. Now, this is not helping your P&L and your trading. So one of the best things to do when things get really volatile can be to actually isolate yourself. Take that cell phone, put it in another room, turn it off, close the doors, get away from everybody, take down that chat room. You know, you don't always have to be in one of these chat rooms with all these people. It's your position in the end. It's you that needs to make the decisions. So isolating yourself can really help in a volatile market. 4, look up when others are looking down, and of course vice versa. What this means is that you should try to firm up any positions that have moved way far away from you in a move in a volatile event. So for example, if the market went way down and you happen to be short some way far away calls, look to cover them. Think about what would happen if everything turned around and went in the other direction. Now, you don't want to focus all on the market turning around, especially if you're in a situation where you've just lost some money. You don't want to get frozen and just hope everything's going to go the other way. However, you want to be looking up when others are looking down. Now, there are some famous quotes out of there about like being brave and buying when everybody else is selling and that sort of thing. And you know, that advice can be good at times, but also you don't want to try to catch a falling knife. But try to think of things differently, and this kind of coincides with number 5 as well. So let's get on to that one. Number 5. Back your charts out from whatever you're looking at now to a bigger time period. So for example, if you've been following the half-an-hour charts or the 5-minute charts, back those out to get perspective. I often will back out to the 180-day chart when I'm looking at charts, or even a 3-year chart when extreme volatility is occurring. This will give you perspective, and that is something that we often lose in a volatile moment or time. Volatile moments are some of the key moments to make money trading, but it can be difficult to gain the perspective needed to rise above that moment to look at the big picture. And one of the best ways to do so is just to back those charts out to maybe a year view and get some perspective on what's going on in the grand scheme of things. So those have been 5 ways to improve your trading in a volatile market. Get out there and do it.